This is apropos. US stocks have been rallying this Wednesday after President Donald Trump signaled that he doesn't plan to fire the Federal Reserve's chairman, Jerome Powell. Reports that the administration is preparing to back down in the trade war with China have also given some much-needed relief to financial markets today. Speaking to reporters on Tuesday, Trump said that the levies on China, currently standing at an eye-watering 145%, would come down substantially. Plans for a potential U-turn come as the harm from the trade policy on the US's economy is becoming clearer. Jenny Shin has this report.
A hint at a U-turn by US President Donald Trump on his trade war with China, with a substantial lowering of tariffs on the world's second-largest economy. Beijing said the door was wide open for trade talks with Washington.
We do not wish to fight, but we are also not afraid of fighting. If the United States really wants to solve the problem through dialogue and negotiation, it should stop threatening and blackmailing, and speak with China on the basis of equality, respect, and mutual benefit.
Trump's shift in tone comes after weeks of tit-for-tat retaliation that pushed US tariffs on China beyond a staggering 145% and a reciprocal 125% Chinese tax on US products. The US president now says that percentage will come down, but said Washington will set the terms if Beijing does not agree to a deal.
Ultimately, they have to make a deal because otherwise they're not going to be able to deal in the United States. And we want them involved. 145% is very high, and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where various elements built it up to 145. No, it won't be anywhere near that high.
The wave of tariffs have sent shockwaves through global markets and stoked recession fears. But Trump has defended his move as an effort to encourage factories and jobs to return to the United States. Both the US Federal Reserve and the IMF have, however, warned that a prolonged trade war will only lead to a harmful slowdown in global growth and hurt consumers around the world, including Americans.
Well, let's bring in Gavin Bade. He's a trade and economic policy reporter at the Wall Street Journal. It's good to have you on the program, Gavin. Thanks so much for joining us. So we've had reports that the hashtag Trump chickened out is currently trending on the Chinese social media platform Weibo. Is that what has happened here? Has Trump effectively chickened out?
Well, that's one school of thought. I think the Trump administration would take umbrage to that. They would take exception and say, this was all part of the plan, right? They bid up these tariffs to an eye-watering level, as you've said, and then hopefully force the Chinese to the table to make a deal. In reality, I think they're feeling the heat from a lot of different quarters here, not just from the stock market, but the bond market, as we've seen. And then also there was a meeting yesterday between Trump and some big retail CEOs, people like Walmart, who warned him that if these tariffs stay on, you might see empty shelves in these stores come summer, because 145% tariff is basically a trade embargo on China, and that remains the U.S.'s third largest trading partner.
Yeah, when the three biggest retailers in the country are telling you and warning you of empty shelves, you definitely will be sitting up and listening, won't you? So President Trump has made it clear that his administration wants to make a deal with China. But is this really the best way to get Beijing to the negotiating table? By constantly applying, maximum pressure with, as we've said, eye-watering tariffs. Also, they've been calling China names. I mean, J.D. Vance used the phrase Chinese peasants in just the last few weeks. Is this really the right way to engage with Beijing?
Well, it doesn't seem to have worked yet, although the Trump administration has been adamant that they are having talks behind the scenes with the Chinese. We've not seen any evidence of that, either from our sources in Washington or those in Beijing either. And I think the fact of the matter is that if there is any contact between these two governments, it's extremely preliminary. And it's going to take a little bit of time to hammer out any sort of deal on these tariffs and other trade barriers. So I think what we're looking out now for is, will Trump relax some of these tariffs before there's a deal to give some space for negotiation, similar to what he did with his 90-day pause on reciprocal tariffs? Now, the White House has been adamant that they say they will not unilaterally lower tariffs, but we may see them massage that in the days to come. I think that they need to make a change here sooner than they can do a deal.
Well, this potential backtracking does come as harm from the trade war on the US policy economy is now becoming clearer. And we've already seen the havoc the policy has had on global markets. Talk to us about some of the other effects that you've been seeing.
Yeah, I think that, a lot of the Trump trade war hasn't shown up in some of the economic data yet, right? Like there are a lot of companies who have stockpiled goods and are going through those stockpiles right now. But once you get into the warmer months and then into the summer, and then companies start to do their ordering for the holiday season. And so if you didn't want all of your Christmas presents, many of which still come from China in the US to, be triple the price or not be able to get them, then you would need to start to see a relaxation of these tariffs. I think another aspect here is that it's IMF and World Bank meeting week here in Washington. And so you have the trade and economy ministers from all over the world coming into Washington this week, not just talking with the Trump administration, but talking to each other about how they want to handle these trade negotiations that are ongoing. Remember, this is not just with China. This is with, over 70 other nations that they got hit with these big reciprocal tariffs and are now supposed to strike trade deals before July. And I think the administration may have bit off a bit more than it can chew with some of those.
Well, Beijing, in its latest retaliation, has sent back planes that it ordered from the US today. Talk to us about the effect that that's going to have. Is that going to make Washington perhaps again try to rethink these tariffs?
I think that the interesting thing when you look at Beijing's retaliation now is that it has not caused Trump to escalate even further. Earlier in the trade war, it's just a few weeks ago, even though it feels like more, Trump would, if he was pushed by if anyone retaliated against Trump, then he would push it further. We have not seen him do that today. Instead, he has taken the temperature down. Now, I think the question is just who's going to be the bigger man and pick up the phone first? Is it going to be Trump or is it going to be Xi Jinping? Both of them have reasons for wanting a deal here. Both of their economies are pretty teetering on the brink of recession. And so can they put their bravado aside? Can they put their egos aside, pick up the phone and say, let's talk? Or are we just going to see more weeks of this posturing?
Well, the world is watching on as the US flip-flops on its trade policy. Is it fair to say that Washington is losing its credibility here?
I think they're certainly at risk for losing their credibility. When I talk to the economy or trade ministers from other nations, they are really puzzled as to what they need to offer the U.S. Even some nations that are pretty far along in their discussions say, we've had contact with the Treasury Secretary, the Commerce Secretary, the U.S. Trade Representative. We still don't know exactly what they want. And so although Trump has given this pause on tariffs and says he wants to negotiate these deals, they claim that they have these offers on paper. I'll believe it when I see it. I haven't seen much progress in a real way on any of these trade deals. And so I think even people are more puzzled as to what the U.S. wants, and then they can assess the credibility after that. But right now, they're just sort of in the wilderness.
Yeah, I mean, it's a confusing back and forth at the moment. Trump has made it clear that he doesn't want to get rid of the tariffs on China completely. The goal for his administration doesn't seem to have changed here. It still wants to contain and suppress China, doesn't it?
Absolutely. And I think this is a big aim of Treasury Secretary Scott Bessent in some of these negotiations with other nations, the negotiations over the reciprocal tariff. We've reported that he is going to look at trying to get other nations to commit to limiting China's access to their own economies. So saying, okay, if you're the European Union or you're Japan, do not allow China to ship goods through your economy to avoid U.S. tariffs. Do not allow Chinese companies to set up manufacturing facilities in your nations. I think that's going to be a very difficult sell, especially in some East Asian and Southeast Asian nations that have big trading relationships with both the U.S. and with China. So that's going to be an interesting thing. And then we'll see where they land on these China tariffs directly. We reported this morning there's there's kind of two schools of thought here. One is in the administration is bring all the tariffs down to maybe 55, 60%, which is still very, very high, but a lot lower than what we have right now. And then there's a different approach, a kind of what they call the tiered approach, where you would see lower tariffs on everyday consumer goods and then higher tariffs up to 100% on strategic goods, things like, microchips, semiconductors, things like that, that the Trump administration deems essential for national security. So more questions than answers on every front here, I think is fair to say.
Yes, very much more questions than answers indeed. Gavin, great to talk to you. Thank you so much for joining us on the program. Really good to get your insight today.
Pleasure's all mine. Thank you.